Alright, so you want to own an F1 team, or at the very least, you want to know what actually happens after you wire the money and take ownership. First of all, a modern competitive F1 team can cost anywhere from $500 million to $1.5 billion dollars just to establish and run for a single season. That's more than a commercial airliner. It's more than the GDP of some small island nations. But here's the strange part. The company operating the team usually doesn't own it. And more importantly, how does owning a $1.5 billion racing operation actually make you money? Because in Formula One, ownership is a completely different business than operation, and it's far riskier than it looks. When people hear F1 team, they imagine fast cars and glamorous drivers. But a modern F1 team is essentially a floating, self-sustaining industrial city on wheels. It consists of over 1,000 employees, specialized engineers, aerodynamicists, mechanics, and strategists. A single F1 car costs $15 million to build and is designed to produce 1,000 horsepower while maintaining structural integrity at speeds exceeding 200 miles per hour, all built for an expected operational life of just one season before being completely redesigned. Take a large team ordered from a major manufacturer like Mercedes, Ferrari, or Red Bull. But the costs are not random. It all depends on the price of carbon fiber at that time, the type of power unit you want in the car, and the capacity of the facility you want your team to be built from. And then there's global sponsorship demand, the ultimate wild card. F1 team valuations don't behave like real estate. They behave like volatile stocks. When F1 booms, then valuations surge. During downturns, they collapse dramatically. For example, during the economic crisis of 2008, some team valuations dropped more than 40% in a single year. Teams that cost $500 million to establish were suddenly worth $300 million before they even completed a full season, simply because sponsorship demand dropped. In global F1, there are three main players: the manufacturers, the team operators, and the team owners. And almost always, they're completely separate companies. For example, a global manufacturer like Mercedes operates multiple teams. You see their logos painted on the side of the car, but they do not own all of those teams. In fact, many manufacturers prefer to own as few as possible. Many are simply partnerships or supply agreements. So who holds the deed to that $1.5 billion racing operation? It might be a billionaire entrepreneur like Elon Musk or a tech magnate. It could be a European industrial family that has owned teams for generations. It could be a Middle Eastern sovereign wealth fund investing in global sports assets. It could be a Japanese conglomerate that owns teams purely as marketing platforms for their automotive division. It could be a private equity firm operating out of a sleek office in New York or London. These owners don't design cars. They don't care about the aerodynamics of getting a car around Monaco. They just rent their teams to operators or manage them through professional management structures. Owning an F1 team is basically a massive high-stakes leasing and investment business. To make your money back, you have to generate sponsorship revenue, win prize money, and appreciate the team's valuation. There are three main revenue streams for F1 team owners, each with a vastly different risk profile. Number one is sponsorship revenue. It is the primary income source. Major sponsors pay $50 to $100 million per season for branding rights on the car and team apparel. The team owner provides the platform, the driver, and the performance. The sponsor provides the capital. If the team performs well and attracts premium sponsors, you lock in strong guaranteed returns. But if the market crashes or the team underperforms, sponsorship revenue dries up. Number two is prize money from Formula One. The FIA distributes prize money based on championship position and historical performance. A team finishing first might receive $150 million. A team finishing last might receive $30 million. Its owner handles the team operations and performance. Formula One handles the distribution. If the team performs well, you earn significant prize money. But if the team struggles, prize money is minimal. Then comes number three. That is the team valuation appreciation. Teams are valued like stocks based on performance, driver lineup, and sponsorship success. When a team wins a championship, its valuation can spike by hundreds of millions. When a team struggles, valuations plummet. This is where owners make generational wealth. When Red Bull won multiple championships with Max Verstappen, the team's valuation increased from $500 million to over $1 billion. Owners who bought at the bottom and sold at the top made hundreds of millions in pure appreciation. But the hangover is brutal. In 2023, as regulations changed and competitive balance shifted, many team valuations fell by over 30%. How do these owners afford the teams in the first place? because almost no one pays cash. The typical financial structure is 30 to 40% equity and 60 to 70% bank financing. Maritime banks and investment firms provide colossal loans secured by the team's assets, sponsorship contracts, and future prize money. To protect themselves, owners use a legal shield called a special purpose vehicle. If a billionaire owns multiple teams, they do not own them under one massive corporate umbrella. Instead, they create separate legal entities, often registered in Luxembourg, the Netherlands, or other jurisdictions with favorable tax treatment. One company, one team. Why? Because if a team faces a lawsuit or goes bankrupt, the rest of the portfolio is safe. But there's a massive problem lurking here. Let's say you borrow $700 million to buy a $1 billion team. A year later, the market crashes and the resale value drops to 600 million. You're now underwater on your loan. The collateral is worth less than the debt. Bank panics and demands cash. If you can't pay, they seize the team. F1 history is littered with the corpses of over-leveraged companies. Williams nearly went bankrupt in 2020. Racing Point faced existential crises. Haas struggled with financial distress. Let's assume you manage the debt perfectly. You still face another enemy, regulations. A team physically lasts multiple seasons, but technical regulations change every few years, turning the industry upside down. The push to decarbonize means sudden mandates for new power unit specifications, hybrid systems, and sustainable fuel requirements, costing hundreds of millions per team. Furthermore, what happens if you build a team today optimized for current regulations to find out in 3 years that the global standard is completely different? Your team becomes a stranded asset. It's too expensive to run, uncompetitive in the new regulatory environment, and impossible to sell. Its $1 billion valuation drops to 300 million. Owners are constantly gambling on regulatory direction, technological trends, and geopolitics. F1 rewards patience and heavily punishes overconfidence. Because of this, teams are traded just like volatile commodities. A team bought for $1 billion might be worth $1.2 billion in a boom because buyers want a championship-winning team today, or drop to 600 million in a crash. Some owners don't even intend to operate the team for its full lifespan. They speculate. Buy low, invest heavily, win championships, sell high. And when a team finally reaches the end of its competitive life, it still holds value. It can be sold to another owner, restructured, or shut down. Its owner might recover $200 to $300 million in residual value, a final floor to the asset's value. So why does this chaotic system work? For a manufacturer like Mercedes, owning every team in their portfolio is incredibly capital-intensive and debt-loaded. If global automotive sales slow down, a manufacturer with multiple teams still has to pay massive operational costs, even if the teams aren't performing. Partnerships and supply agreements provide flexibility. If demand drops, the manufacturer simply reduces their involvement and hands operations to other owners. The manufacturer stays lean, the owner takes the financial hit. This separation of ownership and operations spreads risk across the global financial system. When an operator goes bankrupt, the teams don't disappear. The owners simply take them back and recharter them to a competitor or new management structure. The companies may die, but the team keeps racing. Owning a $1.5 billion F1 team isn't just renting a racing operation. It means managing staggering debt, predicting regulatory cycles, betting on technological trends, and surviving brutal volatility. But when you multiply that across multiple teams, leveraging debt and reading the tides of global motorsport, you begin to understand how modern F1 empires are built. Not through control of the cars, but through the relentless calculation of risk. The financial engineering behind F1 team ownership is staggering. A single owner might control multiple teams through separate legal entities, each with its own debt structure and sponsorship agreements. Red Bull owns both Red Bull Racing and Scuderia AlphaTauri. Mercedes owns Mercedes-AMG Petronas and has partnerships with other teams. This portfolio approach allows owners to diversify risk. If one team underperforms, the others might compensate. But it also requires sophisticated financial management and regulatory expertise. The complexity of F1 team ownership means that success requires not just capital, but also deep understanding of the sport, the regulatory environment, and the global financial system. A billionaire without F1 expertise cannot simply buy a team and expect success. They need experienced management, technical leadership, and strategic vision. The driver market represents another massive financial component of F1 team ownership. A top-tier driver like Lewis Hamilton or Max Verstappen commands salaries of $50 to $100 million per season. These are not just salaries, but investments in team performance and sponsorship value. A championship winning driver can increase a team's valuation by hundreds of millions. A driver underperforming can destroy team value. The driver market is highly volatile and unpredictable. A driver's value can increase dramatically after a championship win or decrease significantly after poor performance. Teams must constantly evaluate whether to retain drivers, invest in young talent, or pursue established stars. The wrong driver choice can cost a team hundreds of millions in lost sponsorship and prize money over a multi-year contract. The sponsorship market in F1 is equally complex and volatile. Major sponsors like energy drink companies, automotive manufacturers, and technology firms pay massive sums for branding rights. But sponsorship is contingent on team performance and global brand perception. A team that wins championships attracts premium sponsors willing to pay top dollar. A team that struggles attracts sponsors willing to pay minimal amounts. The sponsorship market is also subject to global economic cycles. During economic booms, sponsorship revenue surges. During recessions, sponsorship revenue collapses. The 2008 financial crisis devastated F1 sponsorships. Multiple teams lost major sponsors and faced financial distress. The COVID-19 pandemic created another crisis, though the budget cap introduced in 2021 provided some protection by limiting spending and making teams more financially sustainable. Budget cap represents a fundamental shift in F1 team ownership economics. Before the budget cap, teams engaged in unlimited spending to gain competitive advantages. This drove costs to unsustainable levels and created barriers to entry for new owners. Budget cap limits operational spending to $140 million per season, theoretically leveling the playing field. But the budget cap doesn't eliminate the structural deficit that requires owner subsidies. Teams still operate at a loss because revenue from sponsorships and prize money doesn't cover operational costs. The budget cap simply limits how much owners can lose. This makes F1 team ownership more sustainable, but doesn't eliminate the need for owner investment. Regulatory environment in F1 is constantly evolving, creating both opportunities and risks for team owners. The current push towards sustainable fuels and hybrid power units represents a massive regulatory gamble. Teams investing heavily in current technology might find that technology obsolete within a decade. The potential introduction of new teams through expansion represents both opportunity and risk. New teams would increase competition and potentially dilute prize money distribution, making it harder for existing teams to break even. Long-term viability of F1 team ownership depends on whether the sport can generate sufficient revenue to support team operations without requiring massive owner subsidies. This requires continued growth in TV viewership, sponsorship revenue, and merchandise sales. The Netflix effect has dramatically changed F1 team ownership economics. The Drive to Survive series has increased global interest in F1, driving up sponsorship revenue and team valuations. Teams that were worth $300 million 5 years ago are now valued at $500 million to $1 billion. This boom has created opportunities for owners to sell at peak valuations, but it has also attracted new investors who may overpay and face losses when the cycle turns. The boom and bust cycles mean that timing is critical in F1 team ownership. Buying at the bottom of a cycle and selling at the top can generate generational wealth. Buying at the top and holding through a downturn can result in massive losses. The integration of F1 into global finance has changed the nature of team ownership. Private equity firms view F1 teams as alternative assets with potential for appreciation and cash flow generation. Sovereign wealth funds view F1 teams as strategic investments that enhance their country's global profile. This financialization of F1 has created both opportunities and risks. Opportunities because professional financial management can improve team efficiency and profitability. Risks because financial investors might prioritize short-term returns over long-term sporting success. The tension between financial optimization and sporting excellence is a defining characteristic of modern F1 team ownership. The technical complexity of F1 teams creates another layer of risk for owners. A single design decision can cost millions in development and potentially render a car uncompetitive. The aerodynamic design of an F1 car is incredibly complex, requiring thousands of hours of wind tunnel testing and computational fluid dynamics analysis. A team that makes the wrong aerodynamic choice might spend an entire season uncompetitive, losing sponsorship revenue and prize money. Power unit development is equally complex. Teams must balance performance, reliability, and fuel efficiency while adhering to strict technical regulations. A power unit failure during a critical race can cost a team millions in lost prize money and sponsorship value. The human capital aspect of F1 team ownership is often underestimated. A team's success depends on the quality of its engineers, strategists, and mechanics. Attracting and retaining top talent requires massive salaries and benefits. A top aerodynamicist might command a salary of $500,000 to $1 million per year. A chief engineer might earn $2 to $3 million per year. A team with 1,000 employees might have a total payroll of $100 to $150 million per year. This human capital investment is critical to team success, but represents a massive fixed cost that must be covered by revenue. If a team loses key personnel to competitors, performance can suffer dramatically, leading to lost sponsorship revenue and prize money. Strategic decision-making in F1 team ownership is incredibly complex. Owners must decide how much to invest in current performance versus future development. Investing heavily in current performance might win championships and increase team valuation in the short term. But it might leave the team unprepared for future regulatory changes. Investing heavily in future development might sacrifice current performance, but position the team for long-term success. The optimal strategy depends on the owner's time horizon and financial situation. An owner planning a 5-year exit will make different decisions than an owner planning a 20-year hold. The competitive dynamics in F1 create a constant arms race in spending and innovation. Teams that spend more on development typically perform better. But the budget cap limits how much teams can spend, creating a more level playing field. However, the budget cap doesn't account for historical advantages. Teams that have invested in superior facilities and infrastructure over decades have structural advantages that new teams cannot easily overcome. A team with a state-of-the-art wind tunnel facility worth $50 million has a competitive advantage over a team with an older facility. This structural advantage persists even with the budget cap, creating barriers to entry for new owners. The global nature of F1 creates additional complexity for team owners. Teams must manage operations across multiple countries, dealing with different labor laws, tax regulations, and regulatory environments. A team might have its headquarters in the United Kingdom, manufacturing facilities in Germany, and power unit development in Italy. Managing this global operation requires sophisticated logistics and regulatory expertise. The global nature of F1 also means that teams are subject to geopolitical risks. Sanctions, trade wars, or political instability can disrupt team operations and supply chains. The Russian invasion of Ukraine disrupted F1 operations and forced teams to reconsider their supply chains and partnerships. The media and public relations aspect of F1 team ownership is increasingly important. A team's brand perception affects sponsorship value and fan engagement. A team with a positive brand image attracts premium sponsors and generates merchandise revenue. A team with a negative brand image struggles to attract sponsors and loses fan engagement. Managing team brand perception requires sophisticated media relations and public relations strategies. A single controversial statement by a driver or team principal can damage team brand value and cost millions in lost sponsorship revenue. The social media age has amplified the importance of brand management, as negative incidents can go viral and cause massive damage to team reputation. The sustainability aspect of F1 team ownership is becoming increasingly important. The push towards sustainable fuels and hybrid power units reflects broader societal concerns about environmental impact. Teams that embrace sustainability can attract environmentally conscious sponsors and enhance their brand image. Teams that resist sustainability might face regulatory penalties and lose sponsorship opportunities. Sustainability transition also creates opportunities for teams to differentiate themselves and attract new sponsors. A team that becomes a leader in sustainable racing technology can enhance its brand value and attract premium sponsors willing to pay for association with environmental leadership. The fan engagement aspect of F1 team ownership affects long-term team valuation. Teams with passionate fan bases generate merchandise revenue and attract sponsors interested in fan engagement. The Netflix effect has dramatically increased fan engagement, particularly among younger demographics. Teams that leverage social media and digital platforms effectively can build larger fan bases and generate additional revenue streams. A team with a large engaged fan base is worth more than a team with a small fan base, even if the teams have identical performance records. This means that team ownership increasingly requires attention to fan engagement and digital marketing strategies. The international expansion of F1 creates both opportunities and risks for team owners. New races in emerging markets like Saudi Arabia and Miami create new sponsorship opportunities and expand the global fan base. But international expansion also increases operational complexity and costs. Teams must travel to more races, manage larger logistics operations, and deal with different regulatory environments. The international expansion also creates opportunities for new owners from emerging markets to enter F1. A billionaire from Saudi Arabia or the Middle East might view F1 team ownership as a way to enhance their country's global profile and attract international investment. The technological innovation in F1 creates constant pressure for team owners to invest in research and development. Teams that innovate faster than competitors gain competitive advantages worth millions in prize money and sponsorship revenue. But innovation requires massive investment in facilities, personnel, and equipment. A team that falls behind in innovation can quickly become uncompetitive, losing sponsorship revenue and prize money. The pace of technological change in F1 means that team owners must constantly invest in new facilities and equipment to remain competitive. A wind tunnel facility that was state of the art 5 years ago might be obsolete today, requiring massive investment in new facilities. The driver development aspect of F1 team ownership affects long term team success. Teams that develop young drivers into champions gain competitive advantages and can sell drivers to other teams for massive fees. A team that develops a championship winning driver can sell that driver to another team for $50 to $100 million. This creates incentives for teams to invest in driver development programs. A team with a strong driver development program can generate revenue by developing drivers and selling them to other teams. This revenue stream is particularly important for smaller teams that cannot afford to pay massive salaries for established drivers. The partnership and supply agreement aspect of F1 team ownership creates additional complexity. Teams often partner with manufacturers for power units, chassis components, and other technical elements. These partnerships can be mutually beneficial, allowing teams to access technology and expertise they couldn't develop internally. But partnerships also create dependencies and potential conflicts of interest. A team dependent on a manufacturer for power units might face disadvantages if the manufacturer prioritizes its own team. The partnership dynamics in F1 are complex and constantly evolving, requiring sophisticated negotiation and management skills. Financial reporting and transparency aspect of F1 team ownership is increasingly important. Teams are increasingly required to disclose financial information to sponsors, creditors, and regulatory bodies. This transparency creates pressure for teams to improve financial performance and reduce losses. The budget cap also requires teams to report spending and adhere to financial limits. This increased transparency and regulation means that F1 team ownership is becoming more like traditional business ownership, with greater emphasis on financial performance and accountability. Teams that cannot demonstrate financial viability might struggle to attract sponsors and creditors. Exit strategy aspect of F1 team ownership significantly influences ownership decisions. An owner planning a 5-year exit will make different decisions than an owner planning a 20-year hold. An owner planning a short-term exit might invest heavily to improve performance and increase team valuation, then sell at a peak. An owner planning a long-term hold might focus on sustainable operations and long-term value creation. The exit strategy also affects how an owner manages debt and sponsorship agreements. An owner planning a short-term exit might take on more debt to fund performance improvements, knowing they will exit before the debt becomes problematic. An owner planning a long-term hold might prioritize financial stability and sustainable operations. Competitive balance aspect of F1 team ownership affects long-term team valuation. A sport with competitive balance where multiple teams can win championships is more attractive to sponsors and fans than a sport dominated by a single team. Budget cap was introduced partly to improve competitive balance and make the sport more attractive. Teams that benefit from competitive balance can attract more sponsors and generate more revenue. Teams that dominate the sport might face regulatory penalties designed to reduce their competitive advantage. This means that team owners must balance the desire to win with the need to maintain competitive balance and sport health. Legacy aspect of F1 team ownership affects long-term team valuation. Teams with long histories and strong brand identities are worth more than teams with short histories and weak brand identities. Ferrari is worth more than a new team with identical performance because of its legendary history and brand identity. This means that team owners who build strong brand identities and create positive legacies can enhance long-term team valuation. A team owner who invests in team culture, fan engagement, and community involvement can build a strong brand identity that persists even if performance fluctuates. Regulatory compliance aspect of F1 team ownership creates constant pressure and risk. Teams must comply with technical regulations, financial regulations, and sporting regulations. Non-compliance can result in penalties, fines, or even exclusion from competition. Regulatory environment is constantly evolving, requiring teams to invest in compliance expertise and legal resources. A team that fails to comply with regulations might face massive penalties that destroy team value. Regulatory complexity means that team ownership requires not just capital, but also deep expertise in F1 regulations and compliance. The sponsorship activation aspect of F1 team ownership affects sponsor satisfaction and retention. Sponsors don't just pay for branding rights, they expect activation opportunities, hospitality, and engagement with the team. A team that provides excellent sponsorship activation can retain sponsors and attract new sponsors. A team that provides poor sponsorship activation might lose sponsors and struggle to attract new sponsors. The sponsorship activation requires sophisticated event management, hospitality, and customer relationship management. A team with excellent sponsorship activation can generate additional revenue through premium hospitality packages and exclusive experiences. Merchandise and licensing aspect of F1 team ownership creates additional revenue streams. Teams generate revenue through merchandise sales, licensing agreements, and brand partnerships. A team with a large fan base can generate significant merchandise revenue. A team with a strong brand identity can attract premium licensing partners willing to pay for brand association. The merchandise and licensing revenue is typically smaller than sponsorship and prize money, but it represents an important additional revenue stream. A team that effectively manages merchandise and licensing can generate millions in additional annual revenue. The digital and streaming aspect of F1 team ownership is becoming increasingly important. Teams generate revenue through digital content, streaming partnerships, and social media engagement. A team with a large social media following can generate significant revenue through sponsored content and digital partnerships. The Netflix effect has demonstrated the value of digital content in driving fan engagement and sponsorship value. Teams that effectively leverage digital platforms can enhance their brand value and attract sponsors interested in digital engagement. The digital aspect of F1 team ownership is increasingly important for attracting younger fans and sponsors interested in digital marketing. Sustainability reporting aspect of F1 team ownership is becoming increasingly important. Teams are increasingly required to report on their environmental impact and sustainability initiatives. This transparency creates pressure for teams to improve their environmental performance. Teams that demonstrate strong environmental performance can attract environmentally conscious sponsors and enhance their brand image. The sustainability aspect of F1 team ownership is increasingly important for long-term team valuation and sponsor attraction. A team that becomes a leader in sustainable racing can enhance its brand value and attract premium sponsors willing to pay for association with environmental leadership. The diversity and inclusion aspect of F1 team ownership affects team culture and brand perception. Teams that embrace diversity and inclusion can attract diverse talent and sponsors interested in diversity initiatives. The lack of diversity in F1 has been a long-standing issue, and teams that address this issue can enhance their brand image and attract sponsors interested in diversity. The diversity aspect of F1 team ownership is increasingly important for long-term team valuation and sponsor attraction. A team that becomes a leader in diversity and inclusion can enhance its brand value and attract premium sponsors willing to pay for association with diversity leadership. Community engagement aspect of F1 team ownership affects team brand perception and fan loyalty. Teams that engage with local communities can build stronger fan bases and enhance their brand image. A team that invests in community programs and charitable initiatives can build goodwill and attract sponsors interested in community engagement. The community engagement aspect of F1 team ownership is increasingly important for long-term team valuation and fan loyalty. A team that becomes a leader in community engagement can enhance its brand value and build a more loyal fan base. The talent development aspect of F1 team ownership affects long-term team success and sustainability. Teams that invest in talent development can build stronger organizations and improve long-term performance. A team with a strong talent development program can develop future leaders and innovators. The talent development aspect of F1 team ownership is increasingly important for long-term team success and sustainability. A team that invests in talent development can build a stronger organization and improve long-term performance. The innovation culture aspect of F1 team ownership affects long-term competitive success. Teams that foster a strong innovation culture can develop better solutions and gain competitive advantages. A team with a strong innovation culture can attract top talent and generate better ideas. The innovation culture aspect of F1 team ownership is increasingly important for long-term competitive success. A team that fosters a strong innovation culture can develop better solutions and gain competitive advantages. Risk management aspect of F1 team ownership is critical for long-term success. Teams must manage financial risk, operational risk, regulatory risk, and competitive risk. A team that effectively manages risk can avoid catastrophic losses and maintain long-term viability. Risk management aspect of F1 team ownership is increasingly important for long-term success. A team that effectively manages risk can avoid catastrophic losses and maintain long-term viability. Strategic planning aspect of F1 team ownership affects long-term team success. Teams must develop long-term strategic plans that balance short-term performance with long-term sustainability. A team with a clear strategic plan can make better decisions and allocate resources more effectively. The strategic planning aspect of F1 team ownership is increasingly important for long-term success. A team with a clear strategic plan can make better decisions and allocate resources more effectively. The organizational structure aspect of F1 team ownership affects team efficiency and performance. Teams must develop organizational structures that enable effective decision-making and execution. A team with a clear organizational structure can operate more efficiently and achieve better results. The organizational structure aspect of F1 team ownership is increasingly important for team efficiency and performance. A team with a clear organizational structure can operate more efficiently and achieve better results. The performance metrics aspect of F1 team ownership affects decision-making and accountability. Teams must develop performance metrics that measure progress towards strategic objectives. A team with clear performance metrics can track progress and make adjustments as needed. Performance metrics aspect of F1 team ownership is increasingly important for decision-making and accountability. A team with clear performance metrics can track progress and make adjustments as needed. Stakeholder management aspect of F1 team ownership affects team success and sustainability. Teams must manage relationships with sponsors, creditors, employees, and fans. A team that effectively manages stakeholder relationships can maintain support and achieve long-term success. The stakeholder management aspect of F1 team ownership is increasingly important for team success and sustainability. A, a team that effectively manages stakeholder relationships can maintain support and achieve long-term success. Crisis management aspect of F1 team ownership is critical for protecting team value. Teams must be prepared to respond to crises such as accidents, scandals, or financial distress. A team that effectively manages crises can minimize damage to team value and reputation. Crisis management aspect of F1 team ownership is increasingly important for protecting team value. A team that effectively manages crises can minimize damage to team value and reputation. The long-term vision aspect of F1 team ownership affects team success and sustainability. Teams must develop long-term visions that inspire employees, sponsors, and fans. A team with a clear long-term vision can attract talent and sponsors and build a stronger organization. The long-term vision aspect of F1 team ownership is increasingly important for team success and sustainability. A team with a clear long-term vision can attract talent and sponsors and build a stronger organization. In conclusion, owning an F1 team is not just about racing fast cars. It's about managing staggering debt, predicting regulatory cycles, betting on technological trends, and surviving brutal volatility. It's about understanding the complex interplay between ownership and operation, between financial engineering and sporting excellence. It's about building organizations that can compete at the highest level while maintaining financial sustainability. Owners who succeed in F1 are those who understand that team ownership is fundamentally a business enterprise that requires sophisticated financial management, strategic planning, and risk management. They understand that F1 team ownership is not a guaranteed path to wealth, but a high-risk venture that requires capital, expertise, and luck. They understand that the separation of ownership and operation, the volatility of team valuations, and the unpredictability of sporting competition create a complex and challenging environment for team ownership. But for those who navigate this complexity successfully, F1 team ownership can generate generational wealth and create lasting legacies. The future of F1 team ownership will be shaped by regulatory changes, technological shifts, and financial evolution. Teams that adapt to these changes and maintain financial sustainability will thrive. Teams that fail to adapt will struggle and potentially disappear. The economics of owning an F1 team are complex, challenging, and constantly evolving. But for those with the capital, expertise, and vision to navigate this complexity, F1 team ownership remains one of the most exciting and potentially rewarding business ventures in the world. If you found this exploration of F1 team economics fascinating, don't forget to subscribe to the channel for more insights into the world of business, finance, and sports. Leave a comment below sharing your thoughts on what it truly takes to own and operate a championship-winning F1 team. And if you want to dive even deeper into understanding the principles of risk management and financial success, check out the link in the description. Thanks for watching, and I'll see you in the next video.